Hello everyone, welcome to today's tutorial. We are going to talk about another indicator called standard deviation. You probably remember the formula from the school, but anyway, we're not going to talk about that today. The standard deviation indicator is an indicator that measures the size of recent price movements of an asset to predict how volatile the price may be uh, in the future or to tell us the volatility at the moment. Um, Normally, big price moves uh, follows small price moves and vice versa. So we have that prior that cycle, I should say. Yeah, the cycle that big moves. Then we have uh, like this here, we have big moves, then small moves, again big moves, small moves, big moves, and it keeps going. We are looking at euro versus dollar, and we are looking at 1 hour chart, but you can change the setting to anything you want, uh, like daily charts or any other assets. It works. Um, the indicator can be added. Let me delete it. Depending on your um, application, your charts, you can go to the settings and what platform you use. Here on eToro, we go to study tools, then we go to the standard deviation. The period, I'm going to leave it at 14, and the standard deviation number at 2. You can choose a color, but it doesn't matter anyway. Then you press create. Okay. As I said, uh, this indicator shows the volatility. So when we have big price moves, the volatility is high. Just gonna add a rectangle here so you can see what I'm talking about. So the big price move was here, and you can see that we had volatility rising. And again, you can see the same scenario happens here. And we have very high volatility, which you can see the numbers rising here. Okay. Um, so uh, as I said, you can use this to predict the to not predict actually. The prediction comes because the volatility and calm market just repeat themselves in a cycle. So after volatile market, normally we have a not volatile market and again a volatile market. So that's like a cycle. That's how you predict. But um, you can find the volatility at the moment as well. So you can see here it's a volatile market, and depending on your strategy, you may want to trade during the volatile markets or you may avoid it. If you are a risk taker, you may want to trade, but if you are uh, a low risk trader, then you may avoid the volatile markets anyway. As one strategy that works, I normally look at the big trend. Here, for example, looking at the chart, you can see that, yeah, the big trend is down, okay? I'm just gonna add a maybe line here. As you can see, this is our trend line roughly. Then, okay, you say we are in a downtrend. So what would be the best point to enter a trade? Volatile situations helps. So if you see a volatile situation like, for example, here, and the price moves against the trend, then at top of the volatility, like somewhere here, anywhere when you see the volatility, uh, you can open a trade in the direction of trend. So you going to just sell here, okay? You sell here. Why you sell here? Because the market is volatile and volatility is against the trend. In uh, technical analysis, normally spikes happen during the fundamental news. This is very important. I always say that I'm using fundamental events to manage my account. So I'm using fundamental to do the money management, but I'm a technical trader. So if you go and look at the events, 90% you will find an important event happen during this time, which caused the volatility. So if the overall trend, like here, is down, and during the volatility, price moves against the uh, current trend, that's a very, very nice opportunity to go in the direction of trend, which is short here. So you sell here, okay? Then I'm gonna add a line. So if you sell here, then you will know that after this volatile market, you will have a few days, or depending on the cycle of the asset that you're trading, of non-volatile, then another volatility will start. So because already we are moving a leg up, so that's very, very hard that next move will be a leg down. So you sell here and nicely price moves down. Then when you are getting into the profit, you can start moving your stop loss below. Then you find another volatile situation, you remove the stop loss here, and then either activate your trailing stop loss, or just move the stop loss manually as you go until someplace price goes back and hit your stop loss here, for example, and then you can see that, yeah, you made a very, very nice profit. Uh, Again, we look at another situation here. We can see, yeah, not too volatile here, so just ignore it. We go here. You see another volatile situation here, and the price moves against the overall trend. So that again probably because of fundamental news. So here could be a good short opportunity. So you open a short here again. So just adding annotation here. So make it a bit more clear for you guys. You sell here and the price will go down. And as I said, depending on your strategy, and you move the stop loss here, and it may hit here, you know, so you exit the trade here and you still made a good profit. But even looking at this, you can see uh, volatility is rising, so you may enter again here. But anyway, depending on how you uh, how your strategy works, you know, and how you're moving your stop loss. If you're just moving that few points below where you open the trade, then it may just still be, you know, just let me check. For example, if here 1.1979, then this one high is uh, yeah, high is 119.27. So 1927, 1986, still nice, still very nice, 60 pips, sorry. So even if you move your stop loss in 20 pips, 30 pips down from the beginning, then it won't hit and you're gonna earn very, very good profit. Um, yeah, sometimes it may not work, you know, but for this chart, as you can see, it worked very perfectly. Um, and those situations that it's not going to work is when, you know, we have the trend reversal, and you know, after the volatile market, you may see a trend reversal. Then that's where your stop loss uh, at your trend line will help you to just cut the losses. But on this situation, on this scenario, it worked very perfectly. So again, if you go and find and test it on the uptrend here, which we had uptrend, you can see we had a volatile market here against the trend, which was up, and then you enter here with a line and price goes up. This strategy works very nice and I love it. So I hope you learned something today and you going to use this method to earn more money and have profitable trading days ahead. Just don't forget to like and subscribe, and you know, if you have any question, just put it down below in comments and I try to respond as soon as possible. Have a very nice day. See you later.